Welcome back, everyone. Sticking with central banks, we're now joined by a panel of thought leaders looking into the future of CBDCs. How do the central banks envision them working in practice? Can central banks simultaneously create a decentralized network while achieving macro policy objectives? Joining on the panel is Timothy Lane, Deputy Governor of the Bank of Canada, Gilbert Verdian, founder and CEO of Quant, Thomas Harjano, CTO of Connection Science at the MIT Trust Data Consortium, and Charlotte Haag, CEO of Visa Europe. And moderating the panel is the FT's chair of the editorial board and U.S. editor at large, Gillian Tett. Over to you, Gillian.
Hello and good morning to everybody watching to what promises to be a highlight of this conference, which is a discussion about where central bank digital currencies, CBDCs, are heading. Now, I love this topic because in many ways it shows the extraordinary cultural contradictions that are stalking the whole world of fintech right now. Cryptocurrency started off as a tool of anti-establishment fervor. They were all about disintermediating institutions, challenging central banks, making them actually, frankly, redundant, and showing that decentralized finance, the crowd, the marketplace, whatever you want to call it, didn't actually need to have leaders and fuddy-duddy institutions with marble pillars. And yet, today, some of the most active experiments are occurring in those very same institutions, the central banks. You've had everyone from the Bahamas with the Bahamian sand dollar, through to the Chinese with the digital yuan, renminbi, through to even the mighty Fed with its Project Hamilton now looking at these issues. And that's just on the retail CBDC side. In many ways, some of the most interesting experiments right now are happening on the wholesale CBDC side between different financial institutions and perhaps most critically, cross-border. I personally think that actually that wholesale cross-border CBDC maybe end up being one of the most important use cases for this whole world. But the question that everyone's grappling with is, what is the point of a CBDC? Does it make sense to have institutions getting involved like this? Can it actually be delivered smoothly and seamlessly? And to what degree do we actually have to have proper connectivity between the different central banks to make the CBDC work? Will CBDCs be a tool of collaboration or outright competition? And what will that mean for the existing fiat currency universe? So we have a terrific group of people to talk to us about this. We have Timothy Lane, Deputy Governor of the Bank of Canada, and Canada's been doing some very interesting experiments recently on this front. We have Gilbert Verdian, who's founder and CEO of Quant, which is a tech company that tries to blend blockchain and cybersecurity. We have Dr. Thomas Harjano, who's CTO of Connection Science and Technical Director of the MIT Trust Data Consortium, MIT. And of course, MIT has been involved with the Boston Fed in this very interesting Project Hamilton project to see whether we can create a digital dollar or not. And last but not least, we have Charlotte Haag, who's the Chief Executive Officer today of Europe Visa, but was previously the Chief Operating Officer of the Bank of England, which of course is another institution that's been looking at these issues in a very real way. But perhaps I can start with you, Deputy Governor, and ask you, what exactly does the Canadian Central Bank think the point of a CBDC is or is not? And are you going to launch one and beat the Americans to it?
Okay, well, thank you very much for inviting me to this panel. I think the starting point is certainly, as you noted, Gillian, this is a situation where the motivations of central banks are very different from those of some of the initial promoters of other aspiring digital currencies. And I mean, for us, it's really the fact that central banks, as long as they've been established, have had a role in creating money for the public. At this point, we do that in the form of banknotes, and that means that the public can hold a liability that's a direct liability of the central bank. A lot of money is not central bank money. Most money in our society is created by private financial institutions. But the role of public money has been diminishing over the years because of the increasingly electronic nature of commerce. And of course, when we move to online commerce, cash is just simply not a viable method of payment. And so the question that arises is, I mean, would it be desirable to introduce a form of electronic money that would be in some sense analogous to cash, that would perform some of the same functions of being a means of payment and a store of value, still be linked to national currencies as a unit of account, and perform some of the same roles in a in the context of electronic trading that cash does in a physical world. And so that's something we've been exploring at the Bank of Canada for a number of years, and I mean, for I think 8 or 9 years we've had research in this area, and in the last 3 years, really, we've kind of made a bit of a shift. I mean, it's in a sense a shift from research to development, and I think it's really an awareness that in order to think about a central bank digital currency in more concrete terms, it's necessary to not just to think in the abstract about, well, would it be desirable to have public money that's usable electronically, but rather to look at, well, exactly what could I do with this? How would it work? How would I get CBDC out of my bank account? How would I spend it? And so all those, and then of course, very important issues regarding privacy, because privacy is certainly one of the features that people like the most about banknotes. It is a legitimate public and private good, but at the same time, privacy, as we know, has its dark side. We know cash is used for criminal purposes, for money laundering, terrorist financing, tax evasion, and all that. And obviously, a CBDC could not be designed in a way that it would be not just a haven for those activities, but in fact an unlimited and fully scalable resource for criminality. And so really the question of sort of how do you design something that gives the privacy that the public wants, while at the same time ensuring that it's not open to large-scale abuses is one of the hard problems. There are a number of other hard problems that we're working on. And so the Bank of Canada, and as at many other advanced economy central banks, we're sort of grappling with a number of the questions that I mentioned, and just trying to think more about how this would work in practice. And this is really in a context where we haven't made a decision yet as to whether this would actually be a desirable addition to the array of payments instruments that there are in the economy, and certainly in all of, if we look at Canada, the U.S., the European Union, the U.K., and Japan, Sweden, jurisdictions like that. There are already well-functioning bank-based payment systems, and so the central bank digital currency would have to provide something extra. And our view is that you really have to explore a little more in detail how it would actually work in order to be able to identify what role it would fulfill. So in that context, we've got a lot of work going on globally, and we've also got cooperation among a number of central banks to try to grapple with some of these problems that I've been mentioning. Now you mentioned the wholesale aspect, and of course that's one we've looked at. I mean, for us, the wholesale is not really as new as a generally available CBDC, in the sense that there's already electronic money that's used for interbank transactions, and that's called bank reserves or settlement balances, or whatever you want to call them. And that would not. There could be an innovation in terms of the technological platform that's used to transfer the reserves, and we've done that or looked at that ourselves in our various rounds of Project Jasper. But for us, the really hard problem that we're putting a lot of resources into is this sort of sense of having a digital successor to cash that would kind of complement what's already available to the public.
Right. Well, thank you. That's fascinating. I must say, for me, one of the key questions I always keep wondering is, what is the use case? What justifies all of this? And Charlotte, I'd love to bring you in because, you straddled these two worlds. You were at the Bank of England for years, just as it was starting to look at this quite seriously. You're now at Visa, which, potentially people who believe in a retail digital currency think could disintermediate the likes of Visa now. Do you see a point in central banks trying to develop CBDCs, retail CBDCs at the moment? Or is it the case that actually the main function of these retail CBDCs is to provide the competitive pressure on groups like Visa to get more efficient and innovative yourselves and to see off the competition?
Well, thank you for that. Of course, I could go on for hours about the level of innovations that we put into this and the investment we make in things like efficiency and fraud prevention, but let me not do that for a second. I do think it's an important moment for central banks to, as Deputy Governor Lane described, really think about what a retail CBDC might look like. Because, as he also said, it's hard. The whole moving from a physical document that embeds effectively all of its aspects in that piece of paper, all of the fraud prevention, all of the knowledge that you can accept it is embedded in one piece of paper, to a digital world where that is effectively unbundled, the verification of it, the places you can use it, what happens if a transaction goes wrong, as well as when it goes right. That all comes apart in a digital world and is embedded in the physical world. So thinking that through is, I think, amazingly complex. But of course, one has to do it now. You don't want to do it at the point where countries decide that they've got to such a low level of physical notes that they must launch it immediately. And cash is a hugely important part of national sovereignty. There's not too many things that actually carry your country kind of with you. Maybe your driver's license, maybe your passport, and your note. So this moment in time, it has to be an important one. So I absolutely applaud them for doing the work now. I think the other great step that's been made recently is the G7 principles, which lay out how to think about the fundamentals of building particularly a retail CBDC. And there's some very important aspects in those principles that kind of constrain the outcomes. Up to now, the debate about what a retail CBDC could look like has included, everybody in the UK having an account at the Bank of England. And I can tell you, as the former chief operating officer, that's kind of a terrifying thought. But the G7 principle starts with do no harm to monetary policy or financial stability. Equally, they talk about the importance of resilience, which I'm sure Gilbert will come in on. So I think they provide a very clear set of guidelines for how we think about this going forward. And the next step for us is to look at those principles and say, some of them are truly for governments and citizens to work their way through. You talked about privacy. Well, that choice around privacy is very much built into societal values. I'm sure that's a question on which governments and citizens should have a perspective and to understand the trade-offs between privacy and things like fraud prevention. Equally, when it comes to think about how you drive through monetary policy and financial stability, that's a real question for central banks. But there are a set of principles in there where I think the private sector can be very helpful, either in some of the aspects of implementation or in just advice. So, if you buy something on your card today, you will get your money back 98% of the time if there's fraud. And thinking through how to create that environment so citizens can be really confident on it, that's something companies like us and others can advise on. Equally, when it comes to cybersecurity, institutions like ourselves have spent literally billions thinking about how you do cybersecurity for the future, because that's the core of our brand and what we promise. So the principles are helpful. I think the next step is to get to what would be the real kinds of requirements that countries would want as they build that out before you jump to the technical, because there's lots of technical innovations out there. But if you just go from the principles to the detailed tech specs, I think you're missing the debate that's really important about how you play this out and how you make sure that all aspects and all stakeholders contribute to that. So I applaud them for the work they're doing, and I think the G7 principles real step forward. And now I think we get to the work of how we all can participate in that in a way to push the thinking to get to the point you could actually really start to build.
Right, well, thank you. And I'm going to come back and later on and pick up on some of those points in a moment. I should say, by the way, if anyone watching has questions for the panel, do start sending them in now, and I'll start weaving them into conversation as we talk. because it'd be very useful to get a sense of what you, the audience, are interested in. But I'd like to bring Thomas in here because, obviously from your position at MIT, you've been looking at this world for years. But MIT is in a particularly interesting position right now because it has been working with the Boston Fed on Project Hamilton. So I'd like to ask you, Thomas, how do you see this developing right now? Do you think it's just sort of smoke and mirrors and cosmetic gestures on the part of central banks, or do you think we actually are going to see a genuine retail, let's leave wholesale aside for the moment, but a genuine retail CBDC emerging anytime soon, be that in America or anywhere else?
So we're looking at the bigger picture in the context of changes happening in the geopolitical world, right? So it's not just about a single country with a single central bank and single currency. Now we have to address this question of the world's configuration is changing, and we wrote about this about a year ago, and we called it the digital Bretton Woods 2.0 is needed. I personally think there's too many technical issues around retail CBDC today. To the way we define CBDC and the way people understand CBDCs today, I think we need a lot more work. Our group, MIT Connection Science and Engineering, our background is data and social analytics, and so what impact CBDC has on what we call mom and pop stores is very important. The impact on Main Street economy is going to be very important. So we've been looking at systems such as the GNU Taler, that's basically a version of the original eCash from David Chaum, where it's a simple model that it preserves some degree of anonymity to the user, but at the same time it limits the possibility of doing fraud or doing money laundering, right? So that kind of system is very attractive for usage in the retail space, at the end user, right? So notice I did not say the word blockchain, okay? just so that it's clear that. So in fact, I think we all need to revisit some of the early works that that tried to mimic cash in the electronic world and just define certain data privacy measures. And so that's the first point. The second point is, I think what's absent in this whole discussion about CBDC is data and data networks, because in the same way that Visa has its amazing payments rails, and that took them 20 years, right, Charlotte, to develop. I mean, that's not going to go away. You can't just throw that away. How can that play a role in sort of being upgraded to providing information about the originator and beneficiary, in a CBDC transaction? So I tend to think that this is going to be a slow process, that we don't want surprises, and then we want to know what the risk and benefits before making any decisions. And particularly for Governor Lane, I think the leadership is excellent, and I think at that level there's only sort of a limited amount that people in the governing role can sort of predict into the future. So defining policies, defining some of the standards today. What is it that needs to be implemented in terms of requirements, so that the technologists can go away and sort of evolve the technology. So it really needs to be policy driven, and it's interesting that Governor Lane talked about privacy. We have a paper called Privacy by Design CBDC that should be coming out soon, and we make the point that it really needs to be policy driven, and then leave the engineers at MIT to figure out how to come up with a solution, because I'm sure they will come up with 1,000 different solutions, but it really needs to be sort of driven from that side versus the tech side.
Well, before we move to Gilbert, and I'm sure Gilbert is going to be the enthusiast on the panel in all this, so we're looking forward to some enthusiastic evangelical comments, Gilbert. Before we do that, though, can you comment at all about Project Hamilton and what has been developed and tested at MIT? I know it's a slightly different team, but I'm curious because, essentially what's happened there is that, the US has taken a different approach. It's creating a proprietary system, and it's trying to get the technical challenges sorted first through an open source system, which is quite innovative. I'm just curious about how you evaluate that.
So I'm going to refrain from commenting on that particular project because I don't like the comment on my peers on campus. Again, we actually Gillian, we actually have several digital currency and crypto projects on campus. It's not just Project Hamilton. My approach has been to, in fact, engage our group. The way we operate with different entities and governments is to open what we call MIT Living Labs. So we've had living labs in Asia. We've had living labs in Europe, in Turkey, in China. We've got now one going on now in South Australia, and we're working with them to see, well, look, instead of doing the technical design of a CBDC, well, what kind of instruments of finance and finance trade could be developed that would just sort of move the needle in terms of digitization. So what we've discovered is a lot of countries, particularly developing nations, they still do everything on paper, right? So when you say, CBDC, they're like, well, that's fine, but we're not even in a digital space, but we're not even using signed PDFs yet. So I think we're trying to, just an example, right? I throw this out. I mean, it'd be great if the world could have a uniform standard on a digital bill of lading for shipping that would be acceptable by all nations. I mean, number one. Number two, a digital letter of credit that would be, presentable around the world, right? Any bank should be able, to, look at it and say, yeah, okay, we'll take that, So we're looking at, this kind of very practical sort of steps, that leads to the possible formation of tokens, stable coins, or that could be part of a synthetic CBDC that chains up to a Fed CBDC. So we're going bottom slowly up as an alternate view versus, well, this is the currency that the government says we're going to use. This is technology we're going to use. Everybody follows. So, well, maybe different communities will end up developing different tokens that are limited in nature. That's within a protected network, but it's chained up to eventually to a central bank issued currency.
So in many ways, a more organic model of development in terms of what we saw for currency itself. I'll never forget, I chatted a few years ago with Augustin Carstens, who's now the head of the Bank for International Settlements. They have a regular sort of meeting between central bank governors to talk about CBDC, and I'll be moderating that next month in Zurich. And he was telling me one of the things that had most shaped his views about CBDCs was a book about the monetary system of Mexico. And he sent me the book. It's an enormous doorstep of a book, which looks at currencies in Mexico over the years, which essentially followed that model, where you had each community creating their own currency, competing wildly. Again, America had that. And, it goes to say there's nothing entirely new under the sun. But Gilbert, I'd like to ask you what you think, because, you have a couple of people here who are paid to be, if not skeptical, then cautious, and one person who's paid to be wonderfully neutral. You are in a position where you're anything but neutral. You're running a startup which is championing the joys of digital security with blockchain. Do you think that central bank community is being too cautious, and can these data and privacy issues be resolved?
Thank you, Gillian. I completely echo the panelists and what Charlotte also said as well. So my background has been in HMG as well as in private sector. So during the financial crisis, I was at Treasury. And, believe it or not, the UK, we were the first country to look at the Satoshi paper officially as a policy. And that was a few weeks after it was released. And correctively, we concluded very early on that this technology is very early and it's too early to do anything about it. So that was about 13 years ago. Moving on from there, from a practical perspective, I've been, running the payment system in the UK at Vocalink, have the hands-on practical experience with a cybersecurity background, and we're looking at this at both sides and using both angles. CBDCs are here. I don't think anyone can argue against that. What we're seeing is a practical policy-led view of CBDCs, and every jurisdiction has different requirements. Some jurisdictions only want wholesale CBDCs, some want retail, and completely agree. The bank does not want consumers and businesses to call them and ask them about a payment delay or some issue. Central banks are just not geared up for that. HMG is not geared up for that, and that relationship always has to stay, with the banks and the consumer. From our recent experience on the practical sense, we're actually implementing the retail CBDC in Latin America for 12 countries, and this is really creating the Latin American dollar. It's a way to upgrade the financial infrastructure for these countries to 2022, because most of them are using very old or antiquated methods of settlement and payment rails. Having digital assets really enables the growth of that economy and the cross-border flow of money and trade across those 12 countries initially, and then we're connecting that up to the US. So we've seen the practical benefit of a retail CBDC to the end user, to the end business, having access to real-time settlement, real-time money, and cross-border flows, which they never had a year or two ago. And the work that we're doing is actually going live in 2023 across Latin America. And our perspective is really, CBDCs are not here to completely turn the financial system upside down. They're here to complement and become an overlay on the existing system. So we will always have real-time payments. We'll always have faster payments and backs and card, and we have all the settlement with the central banks as we do today. But CBDCs give you the ability to do things in a different way, which we couldn't do before. Practically, if you remember, before cards existed, we used to carry checks around and travelers' checks and cash, and that's the way we actually made payments. And now you can carry a card around and you can make payments anywhere in the world, and it's the same process. So what we're going to see is a real evolution of money and the way we transact with money, but with built-in controls, with built-in fraud prevention, and the trust that consumers expect, because they will all expect to have the same resilience, security. I mean, this is national critical infrastructure as the government sees it, and CBDCs will complement and enhance that. And from our perspective, fraud has been an everlasting issue as an industry we've been trying to tackle. But having central bank digital currencies will really allow us to tackle fraud once and for all, and having these controls built in from a policy requirement built into the technology, we can really eliminate the risk that consumers and businesses face.
So question, so you're going to have the Latin American dollar in 2023 that you're running essentially the plumbing and the pipes for. Do you expect that to be as a widely adopted retail CBDC? And to ask a big question everyone's asking in the wake of the Russian invasion of Ukraine, is that the thin end of the wedge of displacing actual dollarization around the world? Because there's a lot of concern about the idea, and I was hearing this in Washington last week at the IMF World Bank meetings, a lot of concern amongst countries about the idea that if we start having a digital dollar, you'll get increased dollarization of many emerging markets. And yet here we're seeing a Latin American dollar, which is in some ways perhaps a fight back, particularly if it beats Project Hamilton.
So I think the Latin American dollar's view is to complement the US dollar. So it's pegged to the dollar and allows that flow amongst Latin American countries, but also back to the US. It's not a currency that's wholesale. It's built to be retail. But the back-end integration really complements how existing banks and their payment systems settle with their central banks. And blockchain technology that we've developed allows easy and seamless integration into core banking payment flows. So you're not changing your banking back-end. You're just adding an additional rail that you can actually settle and pay with. And all your fraud checks, counterparty risk checks, and banking checks, and identity, KYC, etc., is all done as you normally would. So it's an enabler for consumers and businesses to have real-time payments, which they never had before.
So it's not a stable coin backed by dollars or US dollars?
No, it's a central bank digital currency pegged to the dollar, but linked back to the central bank. So
one of the questions I have, and we're getting some great questions from the audience, so I'm going to jump into them quite straight, is, first of all, are CBDCs not a vehicle for mass surveillance? I mean, in the case of China, the answer almost certainly is that is how they're intended to be. I certainly can't see the Bank of England wanting to engage in that kind of thing. When the idea of the Bank of England dealing with 60 million angry retail consumers yelling at them all the time or trying to watch their bank accounts, I think would be quite unlikely. I mean, Charlotte can comment on that. But if you don't want to use CBDCs as a vehicle for mass surveillance, a very good question here from the audience is, why shouldn't we just let stablecoins compete between each other and regulate those instead? Why bother with CBDCs if you've got a stablecoin that could potentially be doing some of the things that Gilbert's trying to do with the Latin American dollar. Gilbert, do you want to comment on that, or then anybody else? Just wave your hand at me if you want to comment on that.
I can just provide a quick view. I think stablecoins and even some cryptocurrency has a place in the financial system, and there's always a need for those for particular use cases. Regulating stablecoins is actually what is happening. There's a harmonization happening along how we treat stablecoins, and it should be treated the same as money. And how you regulate that, it should be the same as traditional money, and that's on hand and underway. I think CBDCs have their place, and it really comes back to the resilience and the risk in the system. So if you have a central bank on the wholesale end, which issues a wholesale CBDC, and then that authorization of the wholesale CBDC allows commercial banks to issue commercial and regulated stablecoins, they are interlinked. So the risk to the system is visible at all times back to the central bank. And this is something that we didn't have during the financial crisis. And if we had CBDC type technology in the financial crisis, we could have had visibility of systemic risk, very early on before it became, as a crisis and what happened. So I think from a central bank perspective, having that governance layer and the visibility of the system allow central banks to really look at policy and resilience and risk in real time and do something about it before it becomes a problem.
Right. Well, of course, if we'd had a retail CBDC during the pandemic, we wouldn't have had to mess around with all those ridiculous checks being sent out to all the households in America and getting lost the whole time. But America's, very antediluvian in some of its retail financial payment systems at the moment. But Deputy Governor Lane, I see you want to comment on the question of whether we should just have a bunch of stable coins instead. Should we have a loony stable coin or two?
Well, I mean, certainly stable coins are an important development, and they do have some similarities in the sense that they offer stability against a they offer stability against a fiat currency, and so they're intended to be used for various types of transactions. At this point, stablecoins are used primarily for transactions involving cryptocurrencies, as a bridge from one cryptocurrency to another. But you can certainly imagine a situation, and people have talked about it, where a stablecoin would evolve to be used more widely as payments for goods and services. And as Gilbert stressed, I mean, there are important regulatory issues there, and particularly with regard to the risk that just as a bank is subject to risk of runs against its assets, if people want to convert bank deposits into cash, then similarly a stablecoin could be subject to run risk if it's not properly regulated. And so there's a lot of work, and of course every piece of a stablecoin system it has its counterpart in the more orthodox financial system, which then can pose risks that need to be addressed and regulated in a way to make sure that the risks are being appropriately managed, the same way that we expect for the mainstream financial system. And so that's a very important program of work, both internationally, and I'm involved in that work, and also in each jurisdiction, sort of trying to figure out how to apply the broad principle of same business, same risks, same rules to stable coins. And so that's obviously a caveat around stable coins, but certainly if properly regulated, they can have a place in the broader sort of array of payments instruments available. I mean, of course, one of the differences between a stable coin and the central bank digital currency is this whole issue of data use, and the fact that stable coins are more often going to be issued by could in principle be used by companies whose business model is basically to offer a method of payment and then harvest the data and use that the way that tech companies use data to sort of build their business. And that's something that I think really speaks to the privacy issue that I mentioned earlier, the fact that when we think about a central bank digital currency, it absolutely key thing would have to be to make sure that it offers a degree of privacy which is acceptable to the public, and so that it's not being used as a method of surveillance, and the public can have the confidence that their transactions are not going to be used against them in some sense. And so and again, there's a caveat around that, which is the fact that criminal transactions obviously are in a different category, and just as you are not allowed to store large numbers of banknotes in your refrigerator, if they're from proceeds of crime, then similar, there have to be ways of for the authorities to track down proceeds of criminal activity in the digital space. But then but then for the general public, I think the whole point, one of the points of a central bank digital currency is that it's being run for public policy reasons, and not in order to sort of draw more business onto a particular digital platform.
Right. Charlotte, I think you want to come in. And of course, Visa's in a very interesting situation, because you did join in with a consortium that backed Libra, or Diem, which was a stable coin that certainly first grabbed, or putative stable coin that first grabbed everyone's attention and put the fear of God into the central bankers. I often think the reason why they spent so much time focused on stable coins was because Mark Zuckerberg terrified them all with the Libra project. But tell us what you make of stablecoin sitting there in Visa, and would you be getting involved in another stablecoin project now if you had the chance?
So there's 2 points I wanted to make. One is that in a digital world, you never want one answer, right? We all know what a single point of failure means, and so I think, again, back to the G7 principles, one of the very important elements is competition. So you do need to have multiple different platforms, ways of paying, right? We settle in 85 or more different currencies around the world. So never have a single point of failure if you want resilience. However strong a belief you have in the technical innovations we've made it to today, my guess is you're always going to be happy that you're going to have competition to enable resilience. My second point is we have moved enormously, and continue to do, as consumers and businesses, into the digital world. The level of innovation is extraordinary. And what we also need to do is not design a world where we kind of become God in terms of how consumers are going to use their money. Consumers are going to embrace a whole set of digital experiences where payment is an enabler to that. And woe on us if we sort of self-determine that. We should encourage the innovation. We should encourage the different use cases. And moving money from A to B is, for people in their lives, about a lot more than that, right? So people who've bought holidays over the past couple of years on the Visa network are pretty happy that they're getting their money back. That was a value-added service that came on top of the money movement. Equally, if you're trying to get into the tube in any day, you want to move really fast to get your payment authorized, because otherwise someone in London Tube is going to throw something at you. So we just need to remember that payments are about enabling consumer experiences, merchant experiences, and make sure we build the seeds of continuous innovation in that space, because the level of change we've seen over the past few years, and you've mentioned some of them, is more than they've ever been. So in some ways, right, different means of payment for us are just another settlement currency. And we all collectively want to be building a series of platforms that are more resilient and enable more choices for consumers and more different payment experiences. And I think we just got to anchor on those two things, because as people who love the technology and love the back end of payments, we can kind of perhaps overrotate on those aspects and not remember who it's all for at the end of the day.
Right. Well, I see that Thomas wants to come in, which is great. And Thomas, I'd also like you to pick up with a question about another question we have. I mean, do comment on the stable issue of stablecoins, but we've got another great question, which is, from a technical perspective, will there be a common platform or protocol that countries around the world can agree on wholesale transactions? I don't know if you have a view on that, but comment both on the question of stablecoins and, if you like, whether there's any chance from a technical perspective of having a common platform.
So just quickly on the stablecoin, I think more work needs to be addressed there, because now we've got this thing. People know about NFTs, but there's this so-called hybrid assets. So as people now realize that buying CryptoKitties is just a waste of time, but now they want to digitize and tokenize real assets of value, how can that be the basis for the development of community-based stablecoins, and how can regulators have visibility into these layers and layers and layers of wrappings around so-called tokenized assets? But that's probably a separate discussion. So back to the last question, Julian. So actually, I think the approach that Quant and Gilbert and his team are doing, I think it's the correct way, meaning that you'd like to create an international standard protocol, both a technical layer and also on the value layer of what it means to transfer assets across, right? So if we are going to have a world with many coins and many smaller communities with their own coins, stable coins, or some version of a token, how can you actually just use the same, what I call secure asset transfer protocol, just the way we use today, when we watch, Netflix, under the hood, it's the same protocol. It's TCP/IP, and then security is SSL and TLS. That's where we need to also address sort of resources for standardization, and it provides the ability for the local communities to evolve independently, right? So long as the pipe between A and B networks are standardized, whatever happens inside A and whatever happens inside B, well, they can figure that out themselves. I don't know if Gilbert, you wanna jump in, because we've been observing Quant's work.
Yeah, thank you, Thomas. Very, very much echo that. I mean, as Charlotte said, consumers and businesses want choice. We don't want to be forced into using one single thing. And the way we see this, evolving is a similar evolution of the internet. This is very nascent. This is very early. But working in collaboration on standards. We have the ISO standard, TC 307. That I helped establish in 2015, and there's 57 countries working on that solely just to standardize DLT technology, and that's a huge effort across the globe. On the protocol level, as Thomas was mentioning, there is an initiative called ODAP, Open Digital Asset Protocol, which is a way to interoperate domestic networks to become cross-border and borderless in a seamless way. And this allows, if you look at the use case and when it comes back to people, it allows you to have your money roam with you anywhere in the world. The same way your mobile is roaming with you anywhere in the world. It works across networks, across protocols, across any frequency. Your money is going to have that same ability and have the security and privacy and all the benefits built in, so you can actually use it safely across any network. And that's where we're heading. So digital assets and payments are an enabler of that. And having programmable money is really a game changer in the way cards was a game changer for what society uses for money in terms of payments as it evolved. So we don't know what's going to happen. We can't really predict the future, but we can help shape it by collaborating globally.
Right. Well, that leads very nicely to the other great question we got, two questions together, which is, do you see CBDC simply as digital fiat, or do you expect them to have more functionality and features and characteristics? Gilbert, you would say definitely they're going to have more features and functionality. That digital fiat is so 20th century. And I see that Deputy Governor wants to come in there. Gilbert, do you want to comment quickly, and then I'll turn to Deputy Governor Lane.
Yeah, I think we're going to have smart money, and that's some of the things we've been writing about. We're also involved in the Digital Pound Foundation in the UK to create thought leadership around this very topic. It really automates a lot of complex business processes and allows you to code in logic into money. And you could say, if this delivery happened on time, automatically tip the delivery driver. If I receive these goods and services from overseas, automatically pay the tax and excise to HMRC. I don't want the hassle of doing it myself. So we're going to see a programmable way of how we're going to operate. And we already do this today. I mean, the way we use our systems and phones and devices, we're already used to being so digital and automating as much of our digital life as possible. It's just going to be money next for us.
One could argue this is more of an evolution, not revolution. I mean, every time you use a vending machine, it's programmable in one sense. But Governor Lane, there's a Deputy Governor Lane.
Well, I guess one of the aspects that this touches on is the business model for CBDC, in the sense that the central bank's involvement might well be creating something that is basically digital fiat, but then it would be for the private sector to innovate and figure out ways of using it and incorporating it in smart contracts and all the sorts of things that Gilbert was mentioning. And most of those are not going to come from the basic design of a CBDC. They're going to come from sort of from the various other companies that are going to find ways of using it in their transactions. And I think it's very hard to predict exactly what kinds of innovations would go on, but certainly, observing what's happened in other aspects of technology, it seems likely that introducing some new product like a CBDC could open up possibilities that haven't already been explored,
Right.
and that central banks are obviously not the ones that are best placed to develop those. So it's kind of a I guess when people think about CBDCs, I think increasingly thinking not of a centralized model where the central bank does everything. The central bank would still be issuing the CBDC, and it would still be a liability of the central bank. But a lot of those uses and sort of how it would be brought to the public and that sort of thing would inevitably involve a high degree of private sector development and collaboration.
Right. I mean, one of the ironies, though, I mean, again, we have a question here, which is someone points out the irony that, a CBDC could potentially be printed as much as the central banks want to print it. And given that one of the sort of rationales for crypto has been, let's try and get an asset which can't just be created indefinitely with no capacity constraint, you have this contradiction in terms here.
Well, we've never been convinced by that argument. I mean, in Canada, we've had inflation averaging a little under 2% over the last 30 years. If you look at the inflation of prices in terms of any cryptocurrency, it's varied by much more than that from one day to the next. And I mean, I think if you're looking for something with stable purchasing power, I mean, crypto doesn't provide a very good example of that. And so for us, if there is to be an argument for a CBDC, it has to be completely different. And in fact, I think for central banks to be involved in this at all, in a sense, what we're bringing to the table is trust. The fact we issue banknotes, they have the stamp of a central bank. We issue them, we stand behind them, and people trust them as money. And if we can bring the same trust to the digital world, then that is something that could provide some benefits, and so what we're thinking about is, well, how can we do that? And that's it is a very different rationale. And if people don't trust the central banks, then CBDC is presumably a non-starter.
Right. Well, sadly, very, very sadly, we are almost out of time. I should say I find this conversation absolutely fascinating, because I think Deputy Governor Lane's point illustrates some of these contradictions that exist in this kind of hall of mirrors, in that, this is a technology that was supposed to be created to build horizontal trust, peer-to-peer trust, and yet in many cases it's been developed on the back of vertical trust in institutions, be that central banks, be that some of the mainstream banks that are creating walled gardens and private chains with Ethereum, be it the exchanges which are now acting as custodian and holding all these assets. I mean, people are putting trust in different types of institutions, but there's still trust being put there. So, decentralization, DeFi, is occurring in some ways, but not in others. And there's this fascinating tension between the two. How this is going to develop, who knows? I think another key point that's come out of the conversation is a degree to which, on the one hand, one of the raison d'etres for this whole world is to have lots of little separate pockets of experimentation and competition and innovation that competes with each other and, basically advances this tech revolution. And yet, one of the themes that comes out over and over again is the need to create interoperability and common standards. So again, how that's going to play out, that contradiction, I just don't know. It's fascinating. But I guess my last conclusion I'd make is that, as someone speaking who's trained as a cultural anthropologist and did a PhD in it, if there was ever a sector in finance where you need to combine analysis of the numbers with the touchy-feely issues like trust, social groups, tribalism, signaling, and the fundamental question is, what is value? How do you create it, communicate it, and transfer it? It really is the world of CBDCs and cryptocurrencies. So Just remains for me to say thank you all very much indeed for your thoughts. Best of luck for each of you in developing this conversation within your own institutions and companies. And I think we all look forward very much to see how this debate is going to evolve, and we're certainly committed to covering it at the FT as much as we can. So thank you very much indeed, and back to the organisers.
Very much.
Thanks, Jillian. A really fascinating point, I think, about how even in DeFi, people are still having to put quite a lot of trust in very large institutions. Coming up next, after the break, is distributed ledger technology at the heart of modern banking? Join us in a few minutes to find out.